Bitcoin at 70,000 US dollars is the place where generational wealth is built. Today I talk with Matt Crosby, an on-chain expert, about where the future of Bitcoin is going. We are diving deep in all of those charts and really trying to figure out how amazing this buy zone that we currently live through really is and where Bitcoin is going in 2026 and beyond. Enjoy. I just watched an interview of you. The last one I could find that you did around December, 3-4 months ago. And there you said the price was, I don't know, 80,000, 90,000. There you said you wouldn't be surprised if the Bitcoin price goes to 70K. Now we are exactly at that point, just like 4 months later. And now we are actually at the 70K range. How do you feel currently in Bitcoin? What are you kind of expecting to see?
Well, I will say I'm putting my money where my mouth is. I think down here, there's some good accumulation opportunities. To me, the risk reward at 60, 65, 70,000 is just very favorable. I mean, I didn't necessarily anticipate we'd drop. I think we were briefly in the high $50,000 region or around there or thereabouts. I didn't necessarily think it would be quite as aggressive a sell-off as we saw, but ultimately down here, Bitcoin at a 50% off. To me, it's buy one, get one free on prices we were at just a few months ago. And we've got lots of data points to show that it's not necessarily the start of, a much deeper retracement. We didn't really get the bull market many were anticipating. So I think many people looking to this bear market and expecting the exact same 70, 80% plus drawdowns that we've typically seen. To me, the on-chain data isn't really supporting that. Now, the one caveat to that is obviously we're in some pretty uncertain times when it comes to geopolitical tensions and if there's going to be World War III, etc. So I'm sure we can dive into all of that. But for me right now, I'm not trying to exactly catch the bottom. I'm not trying to, go all in at the exact pico cent bottom on Bitcoin price action. If we're 5, 10, 20% above that, to me, that's still incredible value for money. No one looks back at the previous cycle and says, well, he only went in at 19K and we actually bottomed at 15. What a terrible entry price. To me, I'm looking in percentages, I'm thinking granularly, and I'm scaling in at these prices.
So the 58K or like the around 60K price is what you expect to be around the worst that we can see if there's nothing crazy happening, like some global event.
So it's an interesting time. I definitely don't think we've 100% bottomed, especially just as we film this. The price action of the past few days has been less than ideal, we'll say. So there is a situation in which I do see as revisiting 50K, which is where I'm seeing a lot of analysts and a lot of retail participants looking towards, because we've got a lot of convergence of support there with the realized price coming down, the long-term hold, the realized price also around there, cumulative value days destroyed. We'll jump into all these charts later. But around that kind of $50,000 region, there is a lot of confluence, where at that point, I'd be pretty surprised if we had any sustained period of price action beneath that. But one thing you need to consider is usually when it comes to Bitcoin's market peaks, they occur pretty rapidly. I mean, this most recent cycle was a little bit of an exception, but if you look to 2017, for example, absolutely classic Bitcoin bull market, you only really get a couple of days, if that, where Bitcoin's price really tops out before it really plummets. We usually see these big blow-off tops, whereas bottoms almost always form over a much longer period of time, weeks and months of just forming out this bottom, people getting bored, people capitulating, and really setting a foundation of price action. So I think if we do have a bit of a violent wick down, it's not necessarily something that's going to be bored up in a V-shaped recovery. Usually there's some formation of a Bitcoin price action bottom. Now, are we at that range now, or are we at least close to it? In my eyes, I think so, but that doesn't necessarily mean we can't have a little bit more tomfoolery of price action going down, liquidating a few more users. But as I said, in and around these price actions, I'm not fretting over an extra 5% here or an extra 5% there. To me, the asymmetric opportunity of accumulating at these prices at around $60,000 to $70,000, when I foresee Bitcoin being a multi-million-dollar asset, again, it's not something that I'm too stressed about. I'm happy to DCA in here and just chill and accumulate without any stress.
Yeah, if you're looking at Bitcoin for it to being a multi-million-dollar asset and you can accumulate under 100K, I mean, does it really matter if it's 50K, 90K, or 75K? Like it's, of course, you get a little bit more sats, but in the end of the day, you will be making a killing anyways. Before we get into the charts, I want to get one more question out of the way. How surprised were you by the price action the last like couple of years, or this kind of cycle the last 2 years? Is there anything that was kind of different than you would have expected, like in end of 2023 to coming in now 2026?
So that's a good question. And I think this cycle, if you look at it purely objectively through a USD lens, if you look at what Bitcoin did going from $15,000 to $126,000, I mean, it's not maybe the bull market many expected, but if you look at the raw percentage gains, that still massively outperforms any other industry and really does show that Bitcoin still has all this potential. But I think this bull market definitely did feel worse, I'll say, because of a few reasons. Number one, I think fundamentally, as we saw ETF approvals, as we saw the US president come in and say, you know, super bullish on Bitcoin, they want to accumulate, they want to create a strategic Bitcoin reserve. I think when we see all these bullish headlines, everyone kind of gets caught up in how optimistic that is and how positive that should be for price appreciation. And the fact we really still had quite diminishing returns in terms of raw percentage gains compared to the previous cycle, again, does feel a little underwhelming. I think when we all saw those news headlines, when Bitcoin first broke 100K, everyone probably had their eyes immediately set on 150K, 200K, etc. And it's easy to get swept up in that. But in terms of just looking at the USD chart, if you ignore all the noise, really this was a fairly typical cycle. But I think probably the main prevailing factor in this cycle felt even worse is that if you look at the comparative gains, not just versus the USD, but versus assets like gold. So if we're measuring versus a fiat currency like the US dollar, which is constantly debasing, then really we're not necessarily gaining ground if what we're measuring against is always losing ground. What we need to measure is almost the relative comparable purchasing power versus other assets. Now, gold went on this exponential rally to the upside, creating massive new all-time highs, and Bitcoin was kind of just stagnating at that point. So if you actually look at the charts, rather than measuring Bitcoin versus the US dollar, we're measuring versus comparable assets like gold or silver or even US equity indexes, then it certainly feels a lot worse. So I think this market was underwhelming in the fact that we underperformed compared to other assets. But if you look at kind of the macroeconomic environment, everyone constantly calling for a recession, I guess in hindsight, it's a little bit more understandable that there wasn't kind of this big risk-on capital rotation into such a volatile asset such as Bitcoin. But ultimately, again, I think it was still a positive bull market. I definitely don't think that any long-term believers in Bitcoin should start holding back and thinking, you know what, maybe we can't live up to expectations. Because realistically, we're still hugely successful. And the fact that we've already kind of paved the way for Bitcoin over the next few years and decades, given the fact we now have these ETFs, we have these treasury companies accumulating billions and billions of dollars of Bitcoin. And looking at the data, they're not in for a quick buck like many retail speculators are. They're accumulating for the long term. From a long-term perspective, the supply and demand economics of Bitcoin this cycle really tipped in our favor. So again, I think if you take a step back and zoom out, then again, it was a very positive bull market, but I can understand why many, including myself, definitely felt like it was a little underwhelming. But again, I don't think that should have any like negative indication, negative influence on your long-term conviction of Bitcoin.
And this is actually a question that a lot of people have in the comments when they ask, like, hey, why is Bitcoin going down if just Seyr himself buys like 2 times the supply of the daily issuance of Bitcoin every single day? Like we have 450 Bitcoin mined every day, and he buys around, I think in 2026, we are at the direction of like 800, 900 to 1,000 Bitcoin per day, what he's accumulating with Stretch and MSTI ATMs. It's interesting because you would think that this would be the case, then Bitcoin price goes up if we have more and more constant bits on Bitcoin. But maybe it's just, if we wouldn't have the institutional adoption, we would maybe be way lower than that. Like maybe we would hit the 40K or something like that. So I don't know how you look at that, but I also find it very interesting that now with instruments like SDLC and others, we have kind of constant bid on Bitcoin, which I think will just naturally change the market structure because there are more regular buyers. As you said just a minute ago, you have people that are not in for quick buck, but they just accumulate, and they want to accumulate sustainably over 5, 10, 20, 30 years, and not, hey, I want outperform something in the next like 2 weeks that the common traders are in for it.
Yeah, I almost think it can be seen as a little bit of a blessing and a curse, these ETFs and treasury companies, because of course, long term, it's a very bullish thing to see buyers who have this long-term conviction. But at the same time, it provided these passive flows that allowed these accumulators who bought Bitcoin years or even a decade plus ago at a fraction of a coin, typically a fraction of a dollar, sorry, typically for them to actually see the liquidity sufficient enough within the market to sell and actually get rid of their underlying Bitcoin without having a huge amount of influence on the price action, causing slippage. So if I held, say, 1,000, 10,000 Bitcoin and just tried to market sell pre-ETFs, pre-treasury companies, you would really notably see the influence I had on the underlying price of Bitcoin. But now we have millions and millions, if not billions of dollars coming in every single day. If you were someone that bought Bitcoin and have been sitting on a mass fortune, and rather than having to wait for this big retail influx, this big FOMO that leads to these big parabolic blow-off moves, if now you can comfortably scale out every single day, knowing you're barely going to influence the price action because you're selling directly to BlackRock, directly to Michael Saylor, then it provides this liquidity to allow you to, cash in on your investments. And of course, we're all in Bitcoin for the long term. We believe in the technology, etc. But if you bought a decade ago and you've got a few million in unrealized gains, what, maybe you deserve a new house, a new car, a new wife, whatever it may be. So, of course, there's some pros and cons to this. But again, ultimately, over the long term, I do think it's a positive thing. It is just this transition. It's this evolution of market dynamics, like you said.
Yeah, I guess it's just Bitcoin maturing. It's just a normal organic process of Bitcoin becoming more mature.
Yeah, I also think as well, a lot of retail participants, given the fact every previous cycle was primarily retail driven, are probably a little bit over allocated to altcoins. Whereas we've seen these institutional buyers come in who have very, very little interest in altcoins outside of maybe Ethereum and Solana. Well, they're certainly not buying Dogecoins and whatever the next hot shitcoin is. They're looking to buy Bitcoin because even though we're seeing diminishing returns, through the lens of an institutional investor, through the lens of a pension fund, the asymmetric risk reward of Bitcoin is far superior to anything that exists into the traditional finance world. So they're not willing to allocate to something that's very illiquid, that could potentially be rug pulled to zero. They're looking to buy Bitcoin because even though to us we might see it as this old coin which doesn't really provide the returns that you can get if you're speculating and gambling on the hot new decentralized AI coin, whatever it may be. They're happy to do this and they're taking a slightly different approach. Whereas I think with retail, we look at assets like Bitcoin and think, I want to get to 1 BTC or 10 BTC, or I'm buying Ethereum, I want to get to 1 Ethereum, 10 Ethereum, whatever it may be. These new institutional buyers are looking at it through portfolio lenses rather than buying a fixed amount. They're thinking, how can we allocate 1%, 5%, 10%? So therefore, they're not really looking at the optimal entry and exit prices. They're looking to rotate in as the asset is showing strength. And Bitcoin still provides that massive upside potential that no other traditional assets really do, like we've said. So again, it is just a changing, it is a shift. And I don't think that the next cycle is going to continue to be much more underwhelming and we need to be much more bearish on the outlook of Bitcoin. If anything, I think this was the transitionary cycle before the next following cycles can be even more bullish and optimistic because again, it's supply and demand economics. And we are slowly getting towards this squeeze, this slow tipping point where at some point there's just mathematics in our favor from massive upside appreciation and very limited downside potential.
Let's get now to the chart. What are the most important charts or metrics that you are currently watching in 2026?
Well, as always, I've prepared a massive amount of data points just to massively overwhelm everyone. I always say to keep it simple, but today we're going to go full paralysis by analysis. I'm going to give you 1,000 different data points. But no, I'll try and break everything down in a nice simplistic way. So this is, I think, one of the most important charts to be watching right now. This is the spend output profit ratio. Now, this is supply and demand economics in action. This is how much Bitcoin is being sold for realized profit or realized losses. Now, what we can see is we've recently had the third largest and most sustained period of realized losses experienced since 2018. Only surpassed by I actually had a spelling mistake there. Only surpassed by the COVID dump and the FTX collapse. This is almost a dictionary definition period of true Bitcoin capitulation. It feels terrible. People are selling. And this is what happens at cycle lows. Now, I'm not saying we don't go significantly lower. If we look at the FTX dump, we could see as that first occurred, we actually had many months after that where we actually wicked a little bit lower on multiple occasions. But all I'm saying is when we see a huge amount of people selling for a loss, this is a good time to act as a contrarian. We can see as a huge amount of long-term holders are selling Bitcoin for huge amounts of profits, as we got on 3 separate occasions during this bull market. Then again, that gives us some indication, just from a supply and demand economics perspective, that a huge amount of fresh supply is hitting the open market. And did we have the demand to actually sustain that? Well, no, because after each occasion, we had 6 months of chopping and consolidation, or 3 or 4 months of chopping and consolidation. And on the final spike, it pretty much marked the cycle peak. So looking at a data point like this does give me some reassurance that maybe at least the worst is behind us. And especially if we look to something like this. So this is a really interesting metric that I like to look towards, which is what I call the retail capital momentum. So within the cryptocurrency industry, we can track not just the dominance of Bitcoin, but we can also track the dominance of stablecoins. Now, this is almost like a fear and greed index tracking sentiment, but rather than just looking at social usage or what people are tweeting and saying, if we actually look at where people are putting their money, we can see if they're rotating in and out of more volatile risk-on assets like Bitcoin or altcoins, or if they're rotating into stablecoins. Now, again, we've recently seen the largest influx of rotation of capital into stablecoins since the bottom of the 2018 bear market. More than we saw at any point during the previous bear market, more than the COVID 2020 collapse. People are scared. People are rotating out of Bitcoin into these stablecoins, into these safe haven assets. And again, this just gives me some reassurance that now's kind of the time to do the opposite of what the majority are thinking. Because when we look at on-chain data, it's really just the mass psychology of investors quantified. And the unfortunate reality is a vast majority of market participants are wrong most of the time. So as a really simple strategy, it's to look to see what a vast majority of retail investors are doing and typically do the opposite. Now, again, no one single indicator or data point is going to tell us exactly what's coming next. No point is going to be this holy grail to say exactly when to buy and sell. And I think many people were a little bit underwhelmed this cycle. They were looking at, the pi cycle top. They were looking at golden ratio multipliers, whatever it may be, and thinking, well, this didn't hit, that didn't hit. No one indicator is ever going to work perfectly. Maybe it will over 1 or 2 cycles, but historically, throughout any market, unfortunately, that's not the reality. You almost need to find the pieces of a jigsaw puzzle and piece them together and look for confluence, not just in on-chain data, but in the macro data, in the fundamentals, in the derivatives markets. And once you piece all of these together, again, you start working in probabilities and say, you know what, there might still be some downside, but we're probably 70, 80+% of the way through the worst of this cycle. And as we've seen, this has been a true capitulation event. If we look at something like the MVR, the momentum indicator, which is looking at the average accumulation price, the realized cap of Bitcoin in comparison to the market value. And again, for reference, if any of these you want to look into a little bit further, if you go to Bitcoin Magazine Pro on the chart, you'll be able to see all of these and better explanations in case you think I've maybe not explained it too well. But if we look at the ratio between the MVRV indicator and the momentum addition to that, which is just the 1-year moving average, the divergence that we've seen between the average accumulation price and the 1-year ratio of that is pretty much exactly what we've seen at every single bear market low throughout the entire history of Bitcoin. Now, of course, we could say this time is different. It could go much lower. We could be in for considerably lower lows. But again, we're working off the data. We're not trying to look at emotions, work on external influences, looking at news outlets and social media, purely on the data. And the data is looking more and more likely that we're close to a bottom than we're not close to a bottom. So looking at data points like this, again, gives me some confidence. And like I said, we don't want to just look at on-chain data, just look at derivative markets. If we look from a fundamental perspective, Bitcoin has recently dipped beneath the electrical production cost for 1 Bitcoin. So just recently, we saw a huge decrease in the mining difficulty by about 8%, one of the biggest decreases we've seen in recent memory. Because miners are mining Bitcoin for a loss. And we can see throughout the entire history of Bitcoin, if you can buy one for essentially less than it costs to make one, that's a pretty good deal. So for me, I'm looking at all of these data points. And like I said initially, giving myself some indication that now is at least a fairly decent area to be accumulating some discounted Bitcoin.
It's always interesting because, I mean, it's a very old saying, and I think it's very true. Be greedy when people are fearful. I think it comes from Warren Buffett. I'm not sure, but I think it comes from him. And this is exactly what we are seeing. People have low sentiment, people realizing losses, which is a crazy thing. If you believe in Bitcoin, why are you realizing losses? Maybe you are forced to do it because you have to afford life and stuff like that. But all that to say, it's an amazing time to buy, I guess. And I also hear people saying like, "Oh, but it can go lower. It will go lower," and I'm like, "You don't know that." Like we also don't know that. We don't know if this is the bottom, but you also don't know that it's going lower. And so what the only thing that we really can do is seeing like, where are we in history? Is this a good time to buy or a bad time to buy, just from a pure market perspective, a pure data perspective? And the data shows, it's a great time to buy. And then you also have to go in the other side. What if we never hit those prices again? What if tomorrow we rip to 100K and never go under 100K ever again? I mean, it's unlikely, I think, but it's possible. The same way it's possible that we hit 20K in like 5 weeks. I mean, it's very unlikely, I think, but it's possible. Like markets can do things, especially if we have things like the war and stuff like that. Like, and so I don't know. I love that data because it gives us a feeling if it's a very good time or a good time to buy. Because I think it's always a good time to buy Bitcoin. It's just like how good of a time it is to currently buy Bitcoin. And not like, oh yeah, this is the bottom. Like it's just ridiculous sometimes to say like, oh yeah, we'll go lower. Like, how do you know? Like,
Yeah,
we could.
exactly. I'm sure you're seeing it in your comment section on social media as well. Lots of people saying, well, I'm going to wait until 48,000 and then I'm going all in, or I'm going to wait to X price target. And you see the exact same in the bull market of I'm going to sell exactly when we hit $147,000 all in. I'm going to sell the exact top. I actually did some analysis in the previous cycle to see how many unique wallets actually accumulated Bitcoin at the bear cycle lows, the 2018 bear cycle lows, and managed to hold onto that Bitcoin and sell at the bull market peak in 2021. Now, of all the on-chain buyers of Bitcoin throughout that entire period, all of the active wallets prior to that bear market low, all of the people that sold before then, didn't sell, etc., all the wallets that were participating during that phase, that managed to buy on the bottom and sell on the top, there was one wallet that did it. One wallet that bought a significant amount of over $100 worth of Bitcoin and sell it. I think it was about 7,000 into 100 and something $1,000. So whenever you're seeing influencers online saying, yeah, of course I did that, there's a pretty good chance they aren't that one person. So really, you shouldn't be looking at the market as black and white. It's a lot more granular. It's much more probabilistic. Everyone always gives the advice of dollar cost average into the market. Most people don't actually take that advice on board. But at the same time, no one really advises dollar cost averaging out of the market. We all seem to have this idea that we can sell the exact top and then wait to the exact bottom and accumulate back in. Unfortunately, as much as we would all love it to work like that, it just doesn't, because the game theory works in a way that prevents most people making money in the market. Not that Bitcoin is necessarily a zero-sum game, but if we're looking at certain data points and waiting for the MVRVZ score, for example, to hit the lower accumulation zone, which we're not a million miles away from, if I'm a strategic game theorist, I'm going to look to wait until Bitcoin's just above that zone and start accumulating because, well, what if it doesn't reach there? But then there's someone who's a little bit more conservative than me that's going to say, well, I'm going to accumulate just a bit before we get to that territory. So whenever we're looking at key technical levels on a chart, key moving averages, I know recently as we dipped down, many were looking towards that 200 weekly moving average, which we didn't quite reach. They're looking to this price target and think, I'm going to buy as soon as we hit that 200 weekly moving average. But as you said, what if we don't get there? People are going to start buying slightly before, and then it almost becomes self-fulfilling prophecy of it not occurring because everyone's already anticipating that that's definitely going to happen. So especially now that we're having a bigger institutional influence on the market, I mean, BlackRock almost certainly have a warehouse full of analysts working on Bitcoin, looking into the market full time. Now we're not competing against other full-time degenerates in the market. We're competing with, some of the smartest investors, some of the biggest funds in the world who are really objectively trying to accumulate Bitcoin at massively discounted prices. So, of course, it's being more difficult and it's probably going to be more and more difficult going forward. But this is why we need to work in probabilities. This is why we need to look at Bitcoin very pragmatically and objectively through a data-driven lens, removing the emotion out of it, and again, just piecing together where we could be.
If you live in Europe like I do and want to buy Bitcoin the right way, check out Relai. Relai is a Bitcoin-only platform with no distractions, no shitcoins, just a BTC. It's also the easiest way I've found to do what actually works, buying Bitcoin on a consistent basis. Relai is also self-custodial. They never have the keys to your Bitcoin. No freezing of your assets, no counterparty risk, no rug pulling whatsoever. I have been a long-term fan of Relai, not only because it's incredible easy to use and very beginner friendly, but also because it just works. If you want to get started with Relai today, click the link down in the pinned comment or in the description, and once you have downloaded the app, type in Robin in the referral code section of the app to save 10% on fees. So set up your DCA Bitcoin plan today with the Relai app and get cheaper Bitcoin if you use code Robin. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Finally, we have BTC Prague back in 2026. And this year, I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code Robin to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi. I love that. And it also shows us, I love data because it gives data to the feeling we have. Like if you have been in Bitcoin since like 6 years, like I did, like I have the feeling like this is a great time to buy, but it's just a feeling. It's just like, yeah, like I feel like that's like, it feels low compared to what I was expecting. And so it's always awesome to have you and others like James Jack on the podcast and explain to me like why my feeling is actually right with having the data behind them.
Yeah, 100%. Now, this chart is kind of outlining what I was mentioning previously, in that rather than just measuring versus a debasing currency, if we actually measure Bitcoin's relative purchasing power versus other assets, then we kind of get a better understanding of how our purchasing power is actually increasing or diminishing. Now, we look at Bitcoin versus silver. This chart is pretty awful to look at, let's be honest. If we look at Bitcoin priced in silver, which again went on an exponential rally alongside gold, then we actually dipped beneath the 2022 bear market lows, also well beneath those 2017 highs as well. So all of the relative purchasing power we'd made up versus silver, going from around 680 ounces of silver per Bitcoin to well over 3,500 and back down again. That's a pretty monumental decline. Now, immediately after creating this pic, I think silver dipped about 38% in a day. And since then, we've seen gold continuing to make lower highs. But ultimately, if we look at the Bitcoin bear market in terms of relative retracement versus silver, this has already been the third worst bear market in history in terms of the relative purchasing power. And it's a similar situation versus gold and even equities as well. But again, this is why we shouldn't really just be focusing on measuring Bitcoin versus the dollar, the euro, the pound, whatever it may be. But again, looking at relative purchasing power, because a lot of these new institutional investors and market participants, again, are looking at Bitcoin, as more of a portfolio asset rather than just accumulating X amount. They're looking to see the relative strength of the asset in comparison to the other assets in their portfolio. Now, if they can see that Bitcoin is providing massive asymmetric opportunity, looking at the ratio charts of something like Bitcoin versus gold or silver, then again, they're willing to allocate more capital into that because strength attracts strength. When you're looking at capital markets, you almost get this snowball into avalanche effect, which I think is why Bitcoin really struggled in that latest bull market, because we never really got that kind of kickstart of capital inflows. Where if you look at something like gold, as soon as we break past new all-time highs, everyone can kind of understand that maybe we're a little bit overbought, but then we continue to rally massively to the upside because more capital rotates in. We're seeing more strength versus other assets in terms of its relative purchasing power. More investors thinking, I can't miss out. I need to start rotating into that. And then we get these huge moves. So unfortunately, Bitcoin didn't really experience that in this cycle. But now in the bear market, we're actually seeing some positive indications that this may be about to turn. Wrong chart. I'll find it in a second. But if you look at Bitcoin versus assets like the NASDAQ, like gold, etc., over the past few weeks, even in spite of this geopolitical uncertainty that we've had, we're actually seeing Bitcoin make some relative gains versus these assets. While the S&P 500 is down, 8%, gold's down 20+%, Bitcoin's actually up from the lows. So if you look at the relative purchasing power charts, the relative strength charts of Bitcoin versus these other assets, since Bitcoin made its bottom, since we had this, kickstart of tension and uncertainty in the Middle East, Bitcoin has been outperforming, which is, again, just a little bit of a promising indication that maybe most of the sellers are exhausted, most of the short-term speculators have capitulated, and most of the long-term believers have continued to accumulate. But again, this gives us some good indication that people looking at a store of value asset, an inflationary hedge asset, something that they can rotate into in times of uncertainty, which historically was gold, but gold's already had this big parabolic rise and started to move to the downside. Bitcoin, on the other hand, has already had this parabolic fall, if you like, and is starting to move to the upside in relation to these other assets. If we can continue that momentum, then maybe we start getting the first indications of Bitcoin actually having its decoupling moment. I mean, this is what Bitcoin was really made for, times of uncertainty, fiscal irresponsibility, and bad monetary policy. And if now isn't the time for Bitcoin to show its true strength, then I don't really know what is. Now, I don't necessarily think that Bitcoin's going to see a huge amount of capital inflows. We're going to overtake silver and gold in terms of market cap in the next few years. But just investors given this reassurance that Bitcoin isn't a flash in the pan asset, again, just provides more long-term certainty. I mean, we're already seeing Morgan Stanley releasing their own version of pretty much a Bitcoin ETF. We're already seeing billions still going into these ETFs. We'll cover some data in a little bit, but these ETF holders have barely capitulated, and recently they've been very aggressively accumulating, as retail have been doing the exact opposite of that. So again, there's many indications that even though right now feels difficult, we're actually setting up a much stronger base for the coming years for Bitcoin.
Decoupling, interesting. I saw your YouTube, and I think you also mentioned made a whole video about like why decoupling might actually be happening this time around way stronger than like why it might actually happen this time around and not as it was happening not till now, because it's like still people seeing Bitcoin going down with the Nasdaq, people seeing all of the correlation, like, oh, it's just like a risk on asset like all the other ones. And I think it just takes time for Bitcoin to actually like change that, I guess.
Yes, I mean, I've got the chart up here. I did manage to find it in the end. This is similar to the Bitcoin versus silver chart we showed previously, but this is Bitcoin versus the Nasdaq, which is one of the strongest correlation assets we have to Bitcoin, being the 100 biggest tech stocks in the US equity markets. All we can see, even though recently we did actually retrace beneath our 2017 all-time high, we're actually holding up relatively well. And like I said, if you look at the Bitcoin USD chart, it looks fairly stagnant. Obviously, we've had a little bit of a bounce. But if you're looking at these ratio charts, we're actually starting to make some solid progress and actually start reclaiming key levels of resistance during a time of drawdown. Now, that most recent video was looking at the fact that anytime Bitcoin historically has had a bear cycle low, it has coincided perfectly with the S&P 500 or the NASDAQ also bottoming out after a big retracement. Now, this is the first time we've really seen Bitcoin already have its big downward move. Sellers are exhausted. A huge amount of Bitcoin has transitioned from short-term hands to long-term holders. And we've not seen this big drawdown in the S&P and equities yet. So I'm not necessarily saying that a decoupling is going to happen, but if it were to happen, now is as good a time as any. Now, this is the Bitcoin, just the gold price. As I said, traditionally, the safe haven store of value asset during times of uncertainty. I made this analysis piece last week, and already we've dipped beneath this $4,400 level towards this 200 daily moving average. We're seeing gold continue to set lower highs, lower lows, and that's not a very bullish indication. Whereas Bitcoin right now is still setting, even after this downwards move, higher highs, higher lows. So if Bitcoin were to have a true decoupling moment, like I said, strength attracts strength. And the people looking at these relative purchasing power charts are seeing that Bitcoin's holding up relatively well because we've already had this capitulation event. Then that just sets up a good foundation for more capital to rotate into. Because all of these short-term holders are gone. If we look at the ETFs, like I said, I think many were expecting Bitcoin after its first 50% retracement to see a lot of these ETF holders, these traditional investors, to lose faith in the asset. Maybe they were just in it for a quick buck. But even after Bitcoin retraced over 50%, we saw less than a 13% reduction in the amount of BTC held in these ETFs, which is pretty monumental. The fact that even though this new asset, this new shiny thing for pension funds and ultra high net worth investors, etc., we're looking at to think, what can I add to my portfolio? You'd think as soon as this had this big 50% retracement and drawdown entering a potential horrific bear market, they'd capitulate. But we've not really seen that. They seem to have this long-term conviction and belief in the asset and aren't really capitulating like we thought they would. And if we look at the amount of outflows that we're seeing on a 28-day or 4-weekly average basis, it's actually slowing down massively, even as Bitcoin made as low a low as we dipped from around $80,000 to around that $60,000 region. The amount of ETF outflows we saw actually massively diminished. Now, this is different to what we've been seeing in the retail market, where we see huge amounts of capitulation at every single site of drawdown. We're seeing the speculators, these short-term ETF holders that maybe didn't have the conviction, all capitulated on this first initial down move. But now every single day we're seeing less outflows, and we're actually closing in on average inflows in the market. We're seeing ETF holders actually begin to actively accumulate Bitcoin at these discounted prices, which is again different than what we're seeing in the retail markets, where if we look at the funding rates, for example, we're seeing a huge amount of people actively shorting Bitcoin, betting on further downside price action. So again, like we've said many times, I think this is almost the transitionary phase of Bitcoin, where we go from this purely retail asset into this institutional asset, where many people aren't looking at it as a short-term way to potentially make a quick buck or rotate into the next altcoin, but as a staple of a portfolio. Maybe in the future, it's not 60-40 equities bonds, but 60-35-5 with a small allocation to Bitcoin in there, providing these uncorrelated returns massively to the upside. So of course, I'm very bullish. I'm a little bit biased because I absolutely love Bitcoin. Like we said, there's still, of course, some room for some downside. But under the hood, if we look behind the scenes and look at the actual data of what's happening, regardless of price, if you look at it a long-term lens of Bitcoin, then things are continuing to look more and more optimistic.
That all kind of proves the point of Jordi Visser, who mentioned like the silent IPO moment last year in 2025. And it seems to still be happening, where retail is kind of saying, hey, we're getting out for whatever reason. And institutions are like, hey, we're buying. Like, this is an amazing asset. We're in it for the long haul, and we're buying that thing up. And it changes the structure of, I mean, Bitcoin does not have shareholders, but it changes the structure of the Bitcoin holders themselves. I mean, I think most of the market still is retail. I think there's like, I don't know, 10 million, 13 million or whatever amount of retail held, and only a smaller amount by institutions and ETFs. But I think it changes because retail, I think they're not made for volatility, and long term, the institutions are just like buying and buying more and more. It's interesting to see.
Yeah, 100%. And that Jordi Visser IPO moment, I think, really hit the nail on the head. But like I said as well, there's going to be a tipping point at some point. If we look at the trend of long-term hold supply of Bitcoin, again, it's supply and demand economics. Even though we have seen less Bitcoin being held by long-term holders during the course of this bull market, which is very typical, if we look at the trend, it's very much on an upward trajectory. Now, we've recently surpassed 20 million Bitcoin in circulation, which is over 95% of all Bitcoin that will ever exist. Now, we're already seeing treasury companies accumulate significantly more than the daily issuance. And even more bullish is that we look at treasury companies like MicroStrategy, which aren't necessarily relying on pure equity dilution anymore to fund additional accumulation. They have additional capital vehicles like Stretch, which is providing enough liquidity to accumulate additional Bitcoin without necessarily at the downside of shareholders. But if we look at the long-term holder supply of Bitcoin, I think many looked towards this previous bull market and said, well, it doesn't make sense that we didn't have this big blow off top. Why was price being suppressed? Was it manipulated? Because we're seeing strategy, we're seeing treasury companies, we're seeing ETFs buy billions of dollars worth of Bitcoin. But as you said, Bitcoin is still very much a retail-driven asset. If we look at the amount of Bitcoin cumulatively that was offloaded during this previous bull market, so rather than just looking at one of these downturns in long-term holder supply, if you cumulatively add up all of this, it was about 40% of all Bitcoin in circulation was offloaded during this period, which is a monumental amount of sell pressure. So the fact that we actually managed to maintain above $100,000 as we saw 3 distinct waves of millions of Bitcoin hitting the open market is actually fairly impressive. And like we've said, because this was a big transitionary cycle for Bitcoin, where a lot of early adopters, a lot of retail participants who were here for a quick buck now found themselves in an environment with sufficient liquidity to offload without having huge amount of slippage. Maybe a lot of them were just converting into existing ETF holdings for tax reasons or whatever it may be. Now we're seeing the signs of true long-term holder conviction. And we're once again seeing the long-term holder supply begin rapidly accelerating to the upside, which again is a pretty key indication that we've seen the last of the speculators capitulate. And coinciding with what we're seeing, finding support, finding some downside buy pressure as Bitcoin's moved down, having some relative strength versus comparable assets, again, is just painting a picture, giving us some probabilities that Bitcoin is probably closer to a bottom than it is where else.
And this kind of proves the point I was making in another podcast where I said without the institutional adoption, we probably would have been a lot lower now. Is that kind of fair to say that because we've seen so many long-term hodlers hitting the supply and the institutional side kind of gobbled them up, and if they wouldn't have been here, it would have been a lot worse, the bear market?
Potentially, but this is where I said previously, where it's one of these where their arrival kind of had these pros and cons. Whereas we look at historically, when we saw a huge diminishing amount of long-term holder supply, once we saw the huge periods of offloading, it was coinciding with the huge periods of capital inflows from retail participants. Whereas this cycle, because we had these passive flows, these long-term holders didn't necessarily have to wait for massive amounts of capital inflow to reach the market. If we look at something like the value days destroyed multiple, which is kind of looking at the velocity of money. So rather than just looking at the long-term hold supply being moved, it's looking at the ratio of the long-term hold supply being moved in terms of the coin days destroyed, which I know this is going to sound very numbers-based and very mathsy, but essentially the coin days destroyed is how many Bitcoin was held in a wallet multiplied by how long it was held before it was moved. So this way, rather than just looking at how much long-term hold supply has been moved, it's giving additional weight to those that have been holding Bitcoin for extended periods of time. And to actually counteract the evolving market dynamics, evolution in Bitcoin, we're looking at it at a ratio of more recent data compared to the previous yearly average. So what we can see is at traditional market peaks, as Bitcoin was blowing up in these big exponential rallies, this is when we first saw huge amounts of selling, and these usually coincided with pretty major peaks in the Bitcoin price action. Whereas in this most recent cycle, as we said, it was much more cyclical. There was many different phases of profit taking, and there was almost a constant amount of sell pressure coming on from these long-term holders. So it's impossible to speculate how the cycle would have looked without the institutional adoption. But there might not have been the sufficient liquidity for these amount of long-term holders to really start selling Bitcoin. Because if you've been in Bitcoin for 10 years and you've seen the price through 3 or 4 different rallies, then you understand how the market cycles play out. And if you see Bitcoin already at a 30, 40% discount, then you might not start actually selling. So maybe we wouldn't have reached the highs that we would have reached. But if we look at the amount of long-term holders actually selling now, it's very, very minimal. In fact, it's comparable again to bear cycle low levels of long-term holder distribution. Because at these levels, long-term holders are looking at Bitcoin and thinking, well, I'm not going to sell for 50% less than I could have done. I still have this long-term belief in Bitcoin. I've been through all of these cycles. I understand how the market structure of Bitcoin changes and evolves and adapts over time. I'm probably just going to wait to the next cycle to sell. So it is interesting the fact that we had all these passive flows, gave these long-term holders the capabilities to continuously offload coins. But now the fact that we're already at a discount, it looks like this offloading has stopped. Now, does that mean of like, oh, finally the sellers are exhausted? I'm not saying the sellers are exhausted 100%. Of course, we could still see further downside, but it looks like the long-term holders, the ones that do have the long-term conviction, aren't selling anymore, alongside the new market participants who also have long-term conviction in these treasury companies, ETF holders, high net worth individuals, banks, sovereign states are continuing to accumulate. So I think it's very bullish. It's impossible to speculate how the previous cycle would have played out. But certainly long-term holders now aren't looking at Bitcoin as an asset that they need to get out of, but in fact, the complete opposite. They're looking at an asset that they need to feel like they need to accumulate even more of.
It's interesting. This because for me, it's when I look at Bitcoin and when I look at where we are headed, I think I overemphasize what's going on in the market, like what are kind of news, what are kind of events, what are people saying, and underemphasize the data, which I always love looking over with you. And so this data kind of gives that feeling, a real value to it. So yeah, thank you so much for already for that.
Oh, it's fine. I actually did a piece of analysis before where it was looking at about 10 years of Bitcoin news headlines, and it was looking at whether the sentiment of the headline was bullish or bearish. So if it was bullish, you'd anticipate in the following week for the Bitcoin price action to be higher, and if it was bearish, the price action to be lower. But really, the correlation between positive news headlines having a price appreciation effect on Bitcoin and negative news headlines having a bearish effect was about 51%. So it was practically random if a good news headline would have a positive or a negative influence on Bitcoin, or if a negative would have a positive or a negative. So as much as fundamental analysis, I definitely think has some value to look towards for more long-term price appreciation and the pure fundamentals of Bitcoin. Of course, if we get new regulations coming into play that potentially ban Bitcoin, that's of course going to have long-term negative influences on the price action. But on a day-by-day basis, yeah, I do think a lot of people overemphasize and put too much weight onto short-term news and speculation, when realistically the one thing that moves market isn't this headline or that headline, it's who's buying and selling. And if a vast majority of sellers are exhausted and we can see smart money continue to accumulate, it doesn't really matter too much if we're seeing X, Y, or Z happening in the equity markets or commodities, because even though we're still very much correlated to them, we can see Bitcoin, we can see what's happening on chain in real time in a way that we just can't do with any other asset. And like I said, with the decoupling potential, in previous bear markets, we bottomed coinciding with other markets bottoming out, specifically US equities. Whereas in this market, we've already seen the capitulators capitulate before we've seen the S&P 500 or the NASDAQ really have this period of drawdown. So I do think now's a really interesting time. And I do think the next few days or weeks probably dictate how the next months and even year or two play out for Bitcoin. I would really love to see Bitcoin show some relative strength, really, realize its potential and see some capital inflows coming back into the market. But as I said, these bottoming formations take a long, long time. Historically, it takes months, potentially even years if you look towards something like the 2015, 2016 bear market, for Bitcoin to really set a foundation and start moving higher. So honestly, it's quite boring, but for the next few weeks, it might just be a little bit underwhelming. Again, we're looking at news headlines, we're looking at what's happening in the Middle East, we're looking at what Fed policy is doing here and there. And of course, that's going to cause a few percent moves and swings intra-week. But zoom out, look at a long-term cycle basis. Most of it is just noise. Most of it is just stuff that realistically is unpredictable and for the most part doesn't have a long-term influence on the trajectory of Bitcoin.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. Which I think is positive. Like how weird it would be or how bad it would be if Bitcoin would move on news headlines. I think that it's a good thing that we don't have that. And I think there's also like we are a $1 trillion asset, like 1 to 2 trillion, somewhere in between, depending on where the price currently is. And we're not a security, and we are commodity. And so if you company announces some new patent that they have, or company has like new earnings in the earnings call, like something like that, that can definitely move the market because it changes what the company is doing, or like it might actually impact the company for the better or for the worse. But Bitcoin doesn't really care like too much. And then I think this 51% is like interesting because it really shows by data that news headlines and things that come out bullish or bearish doesn't really affect the Bitcoin price too much. It might affect it, but it doesn't. It's sometimes positive, sometimes negative. And there's also I think the impact of individuals on top of Bitcoin is lower and lower. We had, I think, in 2021, where Elon Musk came into Bitcoin, and we had this massive upswing and then a massive downswing, where he first was positive and then negative on Bitcoin, and it was like, I don't know, a month or so where this all happened. And I think we're slowly moving away from that. We're slowly moving away from individuals having impact on Bitcoin, headlines having an impact on Bitcoin, small events having an impact on Bitcoin. I mean, we still see it, but we also 100% know that it, like, there was this Trump tweet coming out and it had like an impact on Bitcoin price. But I'm always questioning, does it really like is it really that, or is it just like there's something also else going on? Because you never really know if that headline just came out at the right time and that's why the market moved, or if that headline actually moved the market in any specific way. So I'm also a little bit curious also with that. And I think your data shows shows exactly that.
Yeah, 100%. And another way to look at it is, now that Bitcoin is becoming more of this institutional asset, and it's just becoming more expensive. I think the bigger Bitcoin gets, obviously, the more it succeeds. But the more the actual fundamentals come into a positive play for Bitcoin. So historically, we looked at Bitcoin as this, shady internet, magic internet money that was just, cypherpunks just trying to accumulate and do some online transactions, whatever they wanted to do. Then there was a very large amount of Bitcoin held in a very small amount of hands. There wasn't a huge amount of dilution across many market participants. Whereas Bitcoin's getting more expensive, now it's not really viable for the everyday person to accumulate 10 or even 1 Bitcoin. It's just simply too expensive. So all of these previous adopters were holding a pretty large percentage of the circulating supply of Bitcoin within just a few hundred, a few thousand people. Whereas now we've had this kind of IPO moment and institutions are coming into effect, we're seeing a larger distribution of coins amongst more market participants. So the fact that we're seeing, a wider spread of coins means that these news events aren't necessarily dictated by a handful of individuals that had a negative reaction to them, an offload, and see a big dump in the market price. Now you need significantly more market participants to actually foresee that as a bearish thing happening and all sell in unison for that to really come into effect. So that's another positive influence that we're seeing by Bitcoin growing as an asset, is that we don't see a smaller amount of people having a larger influence and more power over the upcoming price action of Bitcoin.
Yes, I think that's also a very positive thing. But I think you have some more charts for us.
I do. So this is the global M2 versus Bitcoin year-on-year chart. Now, as I said, I think the previous bull market, many were expecting incredibly bullish, positive things, but Bitcoin is still very much tied to global risk-on sentiment and global liquidity, etc. Now, one of the most posted charts I saw on social media last cycle was the correlation between Bitcoin and global M2 with a 70-day off sale or 100-day off sale, whatever it may be. But really, the correlation of that long term wasn't really there for me. If you look at global M2, it's typically always up and to the right. Most central banks aren't the most sensible and frugal when it comes to the expansion or contraction of their global monetary policy systems. But if you look at it on a year-on-year basis, so look at the absolute rate of change, the acceleration or deceleration of new capital coming into markets, we can see this actually does have an almost one-to-one correlation with the Bitcoin price action. So when global M2 isn't just increasing, but it's increasing at an accelerated rate, this has coincided almost perfectly with big bullish markets for the Bitcoin price action. And the same is true because as this global M2 year on year is shrinking, we still might see global M2 increasing. It's just at a decreased rate. We're again looking at the rate of change on a year on year basis rather than just the raw values. And again, this really outlines the fact that we've struggled this cycle. At the absolute peak, it was only about 8% on a year-on-year basis, whereas in the previous two bull markets, it was over 15% and close to 20%. So really on a year-on-year basis in terms of just global liquidity, this cycle was considerably different than historically what we'd seen for Bitcoin bull markets. And this actually topped out again in June of 2025. So that period of chopping and consolidation, even though we set a new all-time high in US dollar terms, again, if you look at Bitcoin versus gold, we actually topped out in late 2024. And it's a similar story for equity indexes as well. And during that time, again, Bitcoin on a year-on-year basis was actually decreasing. So we look at the price action and it's stagnating, it's holding above $100,000. But on a relative change basis, we're actually really struggling. So I think this better outlines why Bitcoin maybe didn't have the bull market many expected. And alongside that, if we look at the high yield credit cycles for Bitcoin, which is the risk appetite for higher yielding, riskier corporate bonds, again, we never really had this big exponential rush from traditional investors into these more speculative assets. This cycle was kind of over before it really even started. And because of that, Bitcoin never really had this trickle down of capital from riskier assets in traditional markets into more speculative commodities, in assets like Bitcoin and cryptocurrencies that, again, we've traditionally seen. We're already seeing the high yield credit begin to turn over in terms of the risk appetite and the actual demand for these types of products. And this just coincides with Bitcoin not really having the most bullish periods of price action. So just another couple things to watch there. And like I said, if we are to see further downside for Bitcoin, the long-term holder realized price, so the realized price being the cost basis or the average accumulation price for all market participants, the long-term holders is just looking at those average accumulation prices for those who have been in Bitcoin for the longest amount of time, once they've crossed the threshold into becoming a long-term holder. And this is currently around $47,000. And alongside that, the cumulative value days destroyed, which is one of, if not the most accurate metrics we have for forecasting Bitcoin bear market support. This is also in the mid $40,000 region. So again, it's just one of these where we work in probabilities. If we look at the Puel multiple, which is based on the miner earnings, this wouldn't reach the accumulation zone until $50,000. But this is one of those where I know I'm kind of contradicting myself what I said before, but it doesn't necessarily mean that we are going to reach $50,000 or even lower. We didn't reach the sell zones on metrics like the Puel multiple or the MVRBZ this cycle. So it's not a guarantee that we'll reach the buy zones. For me, I'm looking at Bitcoin where it is in terms of the drawdown we've had, in terms of the bullish underlying fundamentals that we're seeing. And for me, I'm happy to accumulate down at these prices. Even if there's slightly more downside price action to come, then to me, that's just more Bitcoin I can get at an even greater discount.
Why is it that like that? I heard that many times that because we didn't had a massive all-time high of like 200K, that we have a lower crash kind of thing. It's like why is the one thing necessary for the other thing?
Good question. So if you look at markets being a purely supply and demand driven asset class, which they truly are. When we have these big parabolic blow-off moves, it results in a huge amount of capital inflows required to actually push Bitcoin into a parabolic move to the upside. So that's usually retail FOMO. That's when Bitcoin's making headlines, people are making Coinbase accounts and throwing money into the market. Now, of course, this results in these huge parabolic moves, but it also means that there's a huge disparity between the average accumulation price of long-term holders and new market participants. So if you looked at something like the ratio between the realized price, which is the average accumulation price for Bitcoin, and the short-term holder realized price, which again is just the new cost basis for new market participants, once there's a huge discrepancy in that, there's almost like this mean reversion effect that we get. That Bitcoin likes to see long-term holders and short-term holders typically have a fairly similar amount, similar price, sorry, in terms of their cost basis, their average accumulation for Bitcoin. So because we didn't have this huge parabolic blow-off move where we didn't see huge amounts of Bitcoin being bought at considerably higher than the average price for all market participants, there wasn't as far to go on the downside because we didn't need to essentially have market equilibrium. So because there wasn't a huge amount of capital inflows, doesn't necessarily mean that there's as much capital to outflow. And then because of that, there's just not as much Bitcoin to dump on new market participants. And again, because we're seeing these passive flows, because we didn't have this big blow off top, many people are just happy to, again, start scaling out of Bitcoin a little bit more slowly. Because if you were holding Bitcoin, again, from a few $100s, a couple $1,000s, and you saw Bitcoin climbing $10,000 every single day, you think that, right, now I have to take action. Now I really need to start offloading some coins. But if we're moving up very, very slowly, it's a much more sustainable approach to the market. If you almost think of when you drop like a pebble into water and you get these big waves to the upside, cause these big waves to the downside, but eventually they start leveling out and leveling out. And just this general volatility of Bitcoin is diminishing as the market cap increases. Because we've gone from an asset class of a few $100 billion to a few $1 trillion, the amount of capital that needs to flow into the market is significantly more to see these big upside moves. And the amount of capital that needs to flow out of the market or sold, again, is massively increased. And just touching on the point we made previously, the fact that the concentration of Bitcoin holdings is now considerably more spread. We don't need just a few individuals to start offloading tens of thousands of Bitcoin to have these huge downward moves, because the holdings are just now concentrated amongst considerably more market participants. And it's just usually not likely that we see a huge amount of people act in the same way at the same time when it comes to offloading coins and accumulating coins, because again, just human psychology. All on-chain data is really showing us is patterns in human psychology, and they're somewhat predictable. And the fact that, again, we didn't see a huge phase of euphoria typically means we don't see a huge phase of Bitcoin fearfulness and, capitulation in the market. Now, as much as we said how awful this Bitcoin bear market has been, we're down in terms of relative purchasing power, we're down 50%, the fear and greed index is looking awful, etc. If you just look at the raw percentage gains of this Bitcoin downwards move, in previous bear markets, we were looking at 75+% almost as a standard, 80 to 90% in most cases. This Bitcoin bear market so far has only had around a 50% retracement, which in the grand scheme of things is a relatively small retracement, yet we've already seen a vast majority of speculators capitulate. If I just quickly pull up, I think it's this chart here. Again, we're at bear market lows when we're looking at capital flows. This is the cycle capital flows chart, which looks at the comparison between new market participants and more experienced Bitcoin market participants and their average accumulation price. Again, it's a little bit complicated. If you look at the realized cap hodl waves on Bitcoin Magazine Pro, which is a free chart, then you'll understand this a little bit better. But when we see a massive disparity between the amount of actual market activity by those long-term holders, those with the biggest conviction, to these short-term speculators, it gives us some insight on where we may be in the market cycle. And right now, it looks like all of these people who came for a quick buck have already gone, because really there wasn't the quick buck to be made. So the previous bull market kind of shapes the following bear market. And if we look at, say, the 2017 cycle, we had this huge, big exponential blow off top. Within just a few weeks, we'd had a monumental 50% plus drawdown. Whereas in this market cycle, we were kind of topping, curling over for many, many months throughout the majority of 2025, really. And now we're starting this long, slow journey process to actually form out a Bitcoin bear market low.
Are you also seeing the business cycle? A lot of people talked about the business cycle in the last I don't know, 7 months, I heard it more and more.
Yeah, so it's interesting. The global PMI is the big one, which I do have somewhere. If not, I'll just quickly load it up. So the manufacturing PMI gives us some good insight into the traditional business cycle of Bitcoin. Now, because Bitcoin has a pretty limited history and the data only comes out fairly infrequently, it doesn't give us the best indication on a kind of intraday, intra-week basis of where the market may be going. But traditionally, the business cycle operates on a slightly longer term horizon than, say, the liquidity cycle. If we look at global M2, typically that operates on more of like a 4-year basis, but the business cycle can sometimes extend into almost an 8-year cycle. So it is a really interesting data point. And again, it does give some indication of where Bitcoin may be going. If people are generally more optimistic on the outlook of an economy, they're willing to invest in businesses, start manufacturing, start providing services, etc. Then again, that just points towards more bullish conditions, especially if there's lower interest rates, there's more cheap debt available, etc. But for me, I think there's a little bit more to it than that. Because if we look at, say, during COVID 2020, when we had this huge dump, everyone was locked inside for a year. There wasn't a huge amount of business going on, but yet we saw Bitcoin skyrocket in a relatively short space of time for around $6,000 to, well, around $60,000, as the manufacturing PMI was still relatively low. Now, this tells me that Bitcoin isn't necessarily tied to an economic output of a country, especially now that we're seeing a bit of a shifting world order with AI coming in, and now we're more of a service-driven economy as we were compared to the previous decades. We were much more based on manufacturing and physical output of goods and products. So it's interesting, but I think Bitcoin is much more tied to liquidity and the flow of capital. As we're still in our relative infancy and we haven't become a staple of bigger portfolios yet. We're starting to get there. We're starting to see a few percent here and there in pension funds. But realistically, Bitcoin is still a more risk-on asset. I think we really just need to see more capital flowing into equities, into commodities, and then start flowing down until we have this decoupling moment. So it's something that I keep an eye on. I think we actually get some PMI data coming out this week as we film this. So it'll be interesting to see if that's up or down and if that has any influence on the Bitcoin price action. But I think there's more to it than just the traditional business cycle. And my thesis for that is if we look to the period of time where everyone was locked inside for a year, asset prices absolutely skyrocketed to the upside.
Interesting. I just like thought it was super interesting because I've never heard about the business cycle in all of Bitcoin, and it just came out like apparently like the last couple of months where more and more people talked about that. Any other charts we should look at today?
Good question. I feel like I've been talking for so long. I feel like we've covered a lot. To be honest, that's pretty much everything that I had to cover. So if there's any other talking points you want to go over, then I'm more than happy to do so. Or if there's any more short-term things, I'm not sure exactly when this is planning to come out. So I always like to be a little bit vague in terms of specifics on price, etc. But yeah, if there's anything you had in mind.
One thing which I think a lot of people, like we now talked about that we likely are at the bottom or around the bottom or like just like a good time to buy, if like no matter like how we want to frame it now. But there is the group of people that says like, oh, 2026 will be like a bad year in general. We will go down further. We'll not rise. And then there's the bulls and the hyper bulls that say like, oh, like we will go up. This is like an amazing year. So much is happening. The big print and all of those things. And then there's like the hyper bulls that always predict like $1 million price in the year that they are speaking in. Like realistically, from all that you're seeing, what is kind of your best guess that we will be like the prices that we'll be seeing in 2026?
Tough question. So I will say that Bitcoin's never really had to live through a multi-year S&P 500 drawdown. We can see that we are still very much correlated to it. So as much as I've said, we could be on the cusp of an extended period of decoupling for the Bitcoin price action. The S&P has had multiple lost decades, they're called, throughout its history, where throughout a 10-year period, it doesn't actually make any real gains. Now, if that were to happen, it's difficult to really imagine Bitcoin thriving under those circumstances. Unless we do have this true decoupling, realistically, Bitcoin still being this new asset, still being this, very volatile and speculative commodity, it's likely not going to be the last thing that investors sell in true phases of fear of capitulation across the wider economy. If we're to see a big World War III, if we're to see a big AI-driven recession, then who knows? But this is something that people have been talking about for years now. I mean, it's the Michael Burry effect, where everyone's calling every single few months to have this big global recession and everything's just going to break and we're going to see huge drawdowns across the board. The next, what's it called? Great Depression. Is that going to happen? Who knows? But I will say during those instances, I think Bitcoin is likely to have some major headwinds. Now, is this the start of the next big Great Recession? Who knows? Like I said, people have been calling this for a long time. Ultimately, we're talking about a Bitcoin, which is an asset which has gone from a fraction of a penny to over $100,000. It pays a lot better to be bullish over the long term than it pays to be bearish. Just from a maths perspective, if you're betting over the next 10 years for Bitcoin to struggle, you don't really have much data to support you. So, of course, I have my own beliefs and biases and guesses and estimations of what we could see. But realistically, no one really knows. And if we look at these equity indexes, the trend has very much been in one direction for a long time. And the current political party in power, trying to be somewhat politically correct here and keep people somewhat neutral, but it doesn't seem like they're the type of people that would be happy to see equity prices collapse. I mean, we already saw in reaction to the oil prices start spiking, the US allowing certain Iranian oil tankers to go through the Strait of Hormuz. I can't remember how you say it. I think there's a big benefit and a big expectation of the current party in power to have bullish conditions for markets. Whether that's in spite of a struggling economy, who knows? I think a lot of people say that the equity markets and risk-on markets, commodity markets, are one-to-one tied with what we see in terms of economic output and GDP, etc. But again, I definitely don't see this as the case. This is kind of back to the business cycle discussion we had previously. I think if there's a huge amount of liquidity coming into the market, people aren't looking at whether now is a good time to start a business or whether now is a good time to invest in property, etc. They're just looking to not lose purchasing power. They're looking to where can I park capital to not have a 2 to 5% debasement every single year. Now, for the everyday retail, not even investor, just retail human in existence, they're having to live through this inflation, which is constantly robbing them of their wealth and purchasing power and the energy that they put to actually accumulate this money, which is just losing every single day it's sat in a bank account. High net worth individuals, investment funds, pensions, etc., aren't looking at the economy and saying, well, we need to go fully into cash, because if then we're stimulating the economy by injecting more cash, we're seeing global M2 expansion, then again, they're just going to see that cash lose purchasing power. So even if we see bad economic conditions, capital rotates somewhere. Now, does this mean that Bitcoin is going to be the place that capital rotates into? Again, this is up for speculation and it's hard to say. So far, we haven't had any prolonged period throughout Bitcoin's history of a genuine decoupling where we've seen prolonged outperformance in relation to the S&P and gold. Could this be the moment that we see that? Well, I certainly hope so. But again, this is kind of on the verge of speculation. We've seen some early indications that this may be the case, but really, if we are to see a prolonged bear market throughout equity markets globally, if we see big economies crashing in this next Wall Street depression, then I think it's going to be a tough time for Bitcoin. But like I said, Bitcoin has been an asset that's gone from a fraction of a penny to over $100,000 in a pretty short space of time. And anyone who's been betting on continued downside in the S&P 500 throughout the past decade probably hasn't done so well either. So my thesis isn't necessarily up and to the right, but it's the fact that capital is going to rotate into somewhere. I don't think global economies are going to mature and become a little bit more sensible with their fiscal policies and monetary stimulus incentives. I think there's going to be continued debasement. I think they're going to continue to let the money printers go. And capital wants to go somewhere just as a means of wealth preservation. And Bitcoin, I think, is at the very least, becoming more on the radar for many, many investors.
Is there actually any correlation to either the Bitcoin price or M2 money supply or anything like that before elections? Like I've never looked at that, like, because like if you are the party in power and you want to say like, oh, like the economy is booming, just print a bunch of money and like the stock market go go higher, I guess.
I also did this analysis just prior to the previous election. It might take me a minute to find it, but I looked at the performance of equities, not just Bitcoin, given the fact that Bitcoin is very strongly correlated to the equity markets. I thought I'd look at the performance of the equity markets going back multiple decades, depending on who's in power, depending on people were bullish or bearish. Realistically, it didn't make any difference. I think we're in a part of history now where we're seeing almost horseshoe politics, where just because you're left or right, the further you get along that spectrum, the closer you actually are to the opposition without even realizing it. And honestly, I don't want to say it doesn't matter, because of course, certain parties can be a little bit more frugal or a little bit more aggressive with their monetary policy. But ultimately, I just think it's something that people put a little bit too much weight onto. And especially when it comes to the news in terms of these things. I know Ben Cowan of Into the Cryptoverse certainly has a lot of insights in the Bitcoin performance through midterm election years and the kind of seasonality performance on a month-to-month basis. But from my research, realistically, it's not had enough of a long-term correlation and a long-term differential between parties in power or between certain midterm cycle years, etc., that it's something that I put too much weight into. So it's certainly an interesting thing. And it's one of these where if you can look at the data and for you, it works. For you can look at it and say, well, Bitcoin always performs like X, Y, and Z during this time of the election cycle, then go for it. You don't have to use on-chain data. You don't have to use any of the fundamental data we do. You don't have to look at derivative markets, macroeconomic data. You can look at moon cycles for all I care. When it comes to Bitcoin investing, all we're trying to do with Bitcoin Magazine Pro, and what I'm trying to do, is just help you align with the thesis that works best for you. Whether you're a dollar cost averager, whether you're an active trader, whether you're someone that wants to be involved in the market every single day, or just accept Bitcoin in your business because it's something that you philosophically align with, then that's all we want to do, just help you align with that. I can't find this data point. I'll try and find it later. But yeah, it was looking at the Republican versus Democratic parties, the influence they had, and it was pretty much the exact same. All of the excess is noise. Realistically, whoever's in power is just going to be as reckless as the person before. And if anything, the trend is becoming even more reckless every single party. So I don't think that's going to change for the foreseeable until maybe we see a big collapse in the system. But again, I think we can kick the can down the road for at least a little bit longer.
I also think so. It's just because I was asking because I know there's midterm election in the United States coming up, I think November this year, on the 3rd of November or something like that. And especially with the current political party, I think they are more measured by the stock market as maybe the Democrats would have been measured by the stock market. A lot of people, especially also with crypto and Bitcoin, I even already got comments like, oh, like I voted for Trump for Bitcoin to go up, not down. It's like actually I think there's a certain voting group actually, which is ridiculous for me, that voted for Trump in hopes that he makes Bitcoin go into the moon, which if you do that, like why? Don't vote for politicians just to bump your backs. I think that's a ridiculous thing to do. But I think the group is actually not that small that like voted for Trump for Bitcoin and crypto to go up and have more favorable laws, have more favorable regulations, have more money printing, which is ridiculous because I think as a Bitcoiner, you actually have to be against money printing. It pumps our backs, but we don't want money printing. That's the thing that we are actually standing against. And so it's a little bit to say like, oh, we hate that money printing was not been happening. Like, aren't we for that? Like, aren't we aligned with less money printing, less government, smaller governments, and all of that? Like, sometimes it does not make sense, but all that to say, I do think there's a fairly good chance that Trump will make everything everything in his power to make the stock market in Bitcoin go as high as possible for the midterm election. If he is successful or not, it's not a question. It's just like something that I have been thinking about.
Yeah, 100%. It's one of those where I think Bitcoin was a lot more fun back in the day when it was just its own asset. We didn't have to do this political analysis and look at what's happening with global leaders and fundamental news stories, etc. And it was just its own thing. But I guess that's just part and parcel of Bitcoin becoming a more mature and institutional asset. But I think as long as you have a belief that Bitcoin is that global economies, central banks, etc., as long as you don't think that they're going to become sensible in the near future, they're going to stop money printing, they're going to start making sensible long-term decisions, then you need to be bullish on Bitcoin. As you said, I think realistically, we're all aligned with the ideology that we shouldn't just be continuously debasing and printing money. But Bitcoin is the answer to that. And until they stop doing that, which is going to be never, then Bitcoin is the way to prevent seeing your wealth debase 4% a year. Instead, you can see it debase 50% in a few months.
Yeah, I think that's a whole nother discussion. Like, I think there is no way central banks can't print money. And even if they would stop, Bitcoin would still be superior to them and will still like gain in market share. I don't know if you can count it as that, but like Bitcoin will still gain popularity because of other contributors, because the US dollar will never be a good store of value and Bitcoin will always be a good store of value. I think there's never a period in time where the US dollar will go up in price. So we see like US dollar prices actually go down. I think that's that I'm fairly certain we'll never see over a period longer than 1 year.
100%. It's something that I actually have written about for the next Bitcoin Magazine print edition, which will be released in Vegas. If any of you lovely audience listeners are coming to Vegas, then you can come and say hi to me and Robin. We'd love to say hello. But it was looking at Bitcoin as a percentage of global wealth, rather than just comparing it versus the US dollar or global M2 or equity markets or the dollar. If we collate all of the global wealth in circulation, which is currently around $480 trillion, and measure Bitcoin as a percentage of all of that, then even in spite of this most recent drawdown that we've had, the trajectory is incredibly accurate. It's even within a very small deviation band, this trajectory of Bitcoin's growth. And it is on the path to potentially becoming a $10 to $20 trillion asset in the next 15 to 20 years. It doesn't happen overnight. If we're trying to overtake gold, again, we need to acknowledge that gold isn't a stationary target. It's not like we need to hit $1.6 million or whatever the exact price is today to surpass gold and become the world's biggest asset. Because by that point, gold has probably become a $50 trillion asset. It's a race with moving goalposts. But as long as we're, again, continuing to stand by the beliefs of what Bitcoin was created for, and we're against this debasement, then Bitcoin ultimately is going to continue to win, continue to thrive. And I think you asked me previously what was my price expectations for 2026, and I just kind of blurted by that. I think my lowest expectation would be $50,000-ish, give or take a few $1,000s. I'd be pretty surprised if we had a prolonged period of time beneath that. And for upside potential, I don't necessarily think that we'd see new all-time highs. But I could foresee, reclaiming $100,000 at some point. Maybe a dip down to 50,000 and then, 100% year up to around 100K. But in general, I think it's a year, as we said, of transition, of some chopping and consolidating, of some global uncertainty, and Bitcoin just kind of ticking along. I mean, every 10 minutes we get a new block. The price changing doesn't stop us from being able to pseudonymously send billions of dollars across the world with no intermediary in a few minutes for a few cents. And that's where Bitcoin's true value and utility comes from, converting energy and electricity into a commodity in the way that's never been done before. So if you're in Bitcoin for the long haul, honestly, just spend the next few weeks and months enjoying summer, having some good times out with some friends and family, eating some good food, and not spending too long in front of the chats. That's mine and Robin's job. We'll just make sure we come back every few weeks and few months and tell you what's going on.
I guess it's the year to stack sats as hard as possible to get ready for when the parabolic moves are happening in 2007, 2008, 2009, 2030, 2040, 2050 in the years to come.
Exactly. 100%.
An amazing year to dig deeper and make things happen, provide value for society, get value back. That's the year to come. Thank you so much, Matt, already for being on. We have, as you know, as you might know from previous appearances on the podcast, an end routine where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you a fun one. What Bitcoin FUD makes you the most mad?
Which Bitcoin FUD makes me the most mad? The environmental impact one just is pretty terrible to me. Like, Bitcoin's killing the environment. It's just, that's with like 5 minutes of research, you can instantly dismiss that one. It's just, it's so like 10 years ago. It's almost entirely renewable electricity. The traditional banking system uses so much more. AI is on trajectory to surpass everything combined in terms of the big warehouses and data centers. If anything, Bitcoin is innovating new renewable technologies and more efficient mining systems. I'm not going to say it's net positive for the environment, but in comparison to what we already have, it's a very silly argument. So that's my least favorite Bitcoin FUD.
Yeah, I would even say it's net positive for the environment, but it's a whole nother podcast. But yeah, it's a very annoying FUD. But it seemed to be going away. Like I no longer hear people make that argument. Maybe it's just my bubble. Maybe I've just like terrified everyone in my environment to bring it up, because I actually mentioned it also. That's the one I hate the most. But yeah, it's I don't know. It doesn't come up that much anymore. It was very annoying from 2021 till like, I don't know, 2024, something like
Until
that.
like the AI boom. I feel like the AI boom has taken a lot of the hate away from Bitcoin, which is kind of nice.
True, yeah. Like people comparing how much it costs to say thank you to AI. Like,
Yeah, 50 liters of water, 50 gallons of water every time you ask it hello, or something ridiculous. As a society, we should be aiming to use an astronomical amount of energy. We should be taking 90% of the sun's energy radiation and converting that and living in abundant wealth of energy for everything. We shouldn't be trying to, turn off the lights. I mean, I'm sure it helps here and there, but realistically, no innovation long term happens through economies and societies by restricting yourself. It's innovating yourself out of these constrictions by using more things and living in abundance. So Bitcoin is providing that, and saying that it's, killing sea turtles or burning water is just absolutely ridiculous.
and always make sure to say thank you to AI. You might not know who's in power in the future. So thank you so much.
100%.
Thank you so much, Matt, for being on the podcast. Before we let you go, where can people find you, ask you questions, and reach out to you?
Yeah, sure. So if you go to Bitcoin Magazine Pro, I'm the director of research and analytics there. We're the data branch of Bitcoin Magazine, which does the big conferences and the physical print and online stuff. And me personally, I'm at Matt Crosby Pro. I don't tweet too much. I'm trying to be off social media a little bit more recently, but occasionally I'll put some good tweets out. And if you ever tweet at me or anything, I don't have a whole lot going on, so I'll get back to you.
Awesome. Then thank you so much, Matt, for being on, and also thank you so much for everyone that is watching and listening. This content is for educational and entertainment purposes only and does not constitute financial advice.